Hello, welcome back to Learn Economia. In this video, we are going to see the key to the budget documents of 22-23. Here, what do we mean by the key of the budget documents or the key to the budget documents? It means that what the budget documents as such consists of. Okay, so that means that we know that the budget is actually it is a summary of all the receipts of the government in the previous year and the plans with respect to the estimated expenditures to be made in the coming year. So this is the budget when we consider the case of budget of any country, not only with respect to India, and this is applicable to every country. In the case of today's video, what we are going to do is that we are specifically looking into the case of India and to see what the budget document of India consists of. So here we could see the list of budget document. The budget document would be a summation of all these kinds of things. We know that there would be annual financial statement. Then there will be something with respect to demand for grants, discussions on financial bill. Then fiscal policy statements would be there, uh, and this is something which pertains to macroeconomic framework statement and also medium-term fiscal policy, fiscal policy strategy statement. Then we have expenditure budget, receipt budget, expenditure profile, budget at a glance, memorandum explaining the provisions in the finance bill, outcome monitoring framework, key features of the budget, and finally implementation of the budget announcement. The implementation of the budget announcement with respect to implementation of the previous budget announcement. Now, what is a budget as a financial statement or specifically annual financial statement? We know that the budget of a country, it is a document, and in the case of India, it is provided under Article 112, and it shows the estimated receipts and expenditure of the government government of India for 22-23. So along with it would be along that it would be showing the estimates for 2021-22 and also the actuals for the year 2021. The receipts and disbursements are shown under three parts. First is consolidated fund, then a contingency fund, and then public account of India. Let's understand each of these in detail. What is the Consolidated Fund of India? This is actually something which draws its existence from the Article 266 of our Constitution. It shows that all the revenues received by the government, loans raised by the government, receipts from recoveries of loans, everything together would form the Consolidated Fund of India. So here we could see that all the expenditure of the government, it is something which is incurred from Consolidated Fund of India, and here no amount can be drawn from the Consolidated Fund without getting the sanction from the Parliament. Before taking amount from the Consolidated Fund of India, the government has to go for a parliamentary kind of discussion. If it gets some 3 by 4 kind of majority, or 3 by 4 kind of majority, then only it can proceed with taking money from the Consolidated Fund of India. Now we have next aspect, the Contingency Fund of India, and this is something which comes under the Article 267 of the Constitution of India, and it authorizes the existence of a contingency fund for the Indian economy, and this is something which is placed at the disposal of the President of India to facilitate meeting of some unseen or unforeseen kind of expenditure by the government and pending authorization from the Parliament. So this means that if any kind of emergency is there, and if there is no time to go for a parliamentary meeting, in that case the president can give a sanction to take money out of contingency fund. So this contingency fund is something to meet emergency. If there is any kind of unforeseen contingencies, the contingency fund would be used to fund the same. So timely action is very much required. That is why the president goes for giving sanction to take money from the contingency fund, even though the parliamentary meeting is not constituted. So the parliamentary approval for such kind of a situation, it could be obtained after taking money out of this fund, and an equivalent amount is drawn from consolidated fund as well to recoup the contingency fund after the ex post facto approval. The corpus of contingency fund as authorized by parliament presently stands at 30,000 crore rupees. Now we have a public account. What is the money held by the government in the public account? We can see that money held by government in trust are kept in public account. So the public account draws its existence from Article 266 of the Constitution of the country. Provident funds, small saving collections, then receipts of the government for meeting expenditure like road development, primary education. So all these monies are actually money kept in the public account. Public account funds that do not belong to the government and have to be finally paid back to the persons or authorities who deposited them do not require any kind of parliamentary authorization for withdrawals, because this money actually belongs to the persons, some private parties or some private authorities. And since it is so, government doesn't have to go for a parliamentary meeting to get authorization for withdrawal of such funds. The approval of the parliament is actually obtained when the amounts are withdrawn from the consolidated fund and kept in the public account for expenditure on meeting some specific objective. So in that case, meeting some specific kind of motive. The annual financial statement, as we have seen earlier, this is something which shows a certain disbursement distinctly which are charged on the Consolidated Fund of India. The government of India can mandate that such items expenditure such as emoluments given to the president of the country, salaries, allowances, etc. given to the chairman and deputy chairman of Rajya Sabha, speaker of Lok Sabha, salaries, allowances, pensions, etc. to the judges of Supreme Court, Controller and Auditor General of India, Central Vigilance Commission, interest and repayment loan raised by the government and payment made to satisfy courts. So all may be charged on the Consolidated Fund of India, and so since it is something which is a normal thing to happen to pay for the people who have been serving the nation and all, this is something which does not require any consent from the Lok Sabha to get money out of the consolidated fund. So in order to spend money for all these kinds of things, there should not be any need for a meeting in the Lok Sabha or Parliament to get the permission of the members to go for withdrawal of such funds. Okay, from the consolidated funds. Next we have we were talking to the consolidated fund. Next we have demand for grants. So this is something which comes under the Article 113 of the Constitution, and as per this article, the estimates of expenditure from the consolidated fund included in the annual financial statement and required to be audited by Lok Sabha. This is something to be submitted in the form of demand for grants, and this is something which is presented to the Lok Sabha along with the annual financial statement or the budget, and generally one demand for grant is presented in respect of each ministry or department. That means in each ministry, the Ministry of Textile, the Ministry of Finance, so every ministry has a right to go for this demand for grants. Next we have finance bill. We could see that during the time of budget presentation, specifically the annual financial statement, a finance bill is also presented, and this is in fulfillment of the requirement of Article 110(1)(a) of the Constitution, which would be detailing the imposition, abolition, remission, alteration, etc. of taxes proposed in the budget. it also looks into the provisions relating to budget that could be classified as a money bill. I hope you and you understand the difference between a money bill and a non-money bill. So here we are focusing on the money bill. A finance bill is a money bill as defined in the Article 110 of the Indian Constitution, and this is something which defines a money bill. Coming to the next part of the budget, that is fiscal policy statement, which mandates under the FRBM Act. The FRBM stands for the Fiscal Responsibility and Budget Management Act, and this is something which came into being in 2003, and also there are many amendments thereafter. The macroeconomic framework statement is presented to the Parliament under Section 3 of the FRBM Act. It contains some kind of assessment of the growth prospect of the economy along with the statement of some specific underlying assumptions. It looks into the GDP growth rate, domestic economy stability, stability of the external sector, fiscal balance, etc., etc., etc. And the medium term fiscal policy statement, fiscal policy strategy statement are also presented to the Parliament under Section 3 of the Constitution, Section 3 of the FRBM Act of 2003. It actually sets out the 3-year rolling targets for some fiscal indicators like fiscal deficit, revenue deficit, primary deficit, tax revenue, non-tax revenue, and the central government debt. It includes, the statement includes some underlying assumption which will be helping to make an assessment of the balance between revenue receipts and revenue expenditure. And it also outlines for the existing financial year the strategic priorities of the government with respect to such an arenas. The statement also explains the current fiscal policy of the government, its financial management principles, and also further it gives some rationale for any major deviation from fiscal measures. Moving to the next part, that is the expenditure budget. As we all know, this is something which could be spread over a number of major heads, the revenue and capital section. We have a revenue expenditure section and a capital expenditure section. In the expenditure 13 budget, the estimates are made for some kind of scheme or program which are brought together. We will be having expenditure of individual ministries or departments which are classified into the center expenditure and transferred to the state. Under center expenditure, we have establishment of expenditure of the center sector schemes, and also other central expenditure including those central public sector enterprises and autonomous bodies. Then in the case of the next classification, that means the transfer made to states and states, we have centrally sponsored scheme, financial commission transfers, and other transfers to the state governments. Next, we have to look into the receipt budget estimates. So this actually where we have, this is something which we look into the receipt side. The flow of income from the public to the government. Basically, it falls into the tax receipt and non-tax receipts and capital receipts. And here the document provides a statement on the arrears of the tax revenues and non-tax revenues. So this is something which is given in the Fiscal Responsibility and Budgetary Management Act of 2004. That came into being in 2003. Some amendments were made in 2004. Trend of receipts and expenditure, along with some along with difference between receipts and expenditure, like deficit indicators, statements pertaining to National Small Savings Fund, etc., are also made here. It also takes into consideration the revenue impact of tax incentives under the central tax system. The statement is given as an annexure to the receipts budget from the budget 2016 to 16-17 onwards. So this also looks into the liabilities of the government, with respect to the securities and bonds. So apart from looking into the asset part, it also looks into the liability part. Asset of the government, tax receipt, non-tax receipt, everything falls as the asset part of the government. Next, we have to see that the budget consists of expenditure profile as well. That means that the government of India incurs expenditure on different heads So under this expenditure, we have what all kind of expenditure? Revenue expenditure and capital expenditure. Scheme expenditure gives a total provision for each of the ministries arranged under various categories. Here also we have some kind of centrally sponsored scheme or center sector schemes, etc., etc., etc. A detailed report on the working of the public sector enterprises is given. The expenditure profile has a separate section for railways. So this is something very much important to understand. The receipts and expenditure of Ministry of Defence demand shown in the actual financial statement are explained in greater detail here, and the details of grants given to the bodies other than the state governments are given in the statements of grants and aid paid to the non-government bodies and appended to the detailed demands for grants of various ministries. Next, we have budget at a glance. So it will be providing a summary of the budget, the receipts, disbursements, etc., etc., would be given. It provides details of the resources transferred by the central government to the state governments. It also shows the revenue deficit, gross primary deficit, fiscal deficit, etc., of the central government. The excess of the government revenue over expenditure, or the expenditure over revenue. So this is something which has very important implications for the country like India. In the case of India, we do have a problem with respect to revenue deficit because our expenditure is always more than our revenue. The government is spending a lot compared to what it receives. So this difference of revenue expenditure difference, uh, it is something which we have to deal with, because it is something which constitutes the fiscal deficit of the country as well. Gross primary deficit is also there for the country like India. The budget at a glance would discuss that too. It is a gross fiscal reduced by the gross interest payments. So in the case of fiscal deficit, we have to understand that the total borrowing of the country, it is much more than the total receipts. So in the budget documents, gross fiscal deficit and gross primary deficit are considered with greater importance. The document also has space for what to say, total resource transfer to the state government, and bulk of grants, loans, etc., transfers, etc., are taken into consideration here. Since independence, it has become a significant statement of the government policy. The budget reflects the uh, shape of the economy, and also the budget is something which shapes the economy, right? For a better appreciation of the impact of the government receipts and expenditure on the sectors, what we have to do is the government made some kind of transfers to the government, state governments, and this analysis is contained in the economic and functional classification of the central government budget, which is brought about by the Ministry of Finance separately. Next, we have to look into the memorandum explaining the provisions in the finance bill. We know what a finance bill is, and to facilitate understanding of taxation proposals which is contained in this bill, provisions for implications are explained in the document which is titled as a memorandum explaining the provisions of finance bill. Then we have to see that the outcome monitoring framework, and this is for central sector schemes and centrally sponsored schemes with the financial outlay of 500 crore and more each. This will and with regard to the CS and CSS, we have to understand that these are with outlay of less than 500 crore each, and the outcome monitoring framework, which itemized the expenditure of the scheme, would be prepared by each of the ministries which go for all these kinds of things, and the finance minister would be presenting the same in the parliament. Next, finally, we have the implementation of budget announcement of 2021-22. In the previous fiscal year, the government made many announcements, and how the government could implement, how far the um, government could what tie to its previous budget announcements. So this is something which plays a very important role in the budget speech of 22-23. This is not only with respect to 22-23. The government has to make such a kind of analysis in every budget. The document would be summarizing the status of implementation of announcements made by the finance minister in the previous budget. Okay, next we have the key features of the budget of 22-23. Just understand by having a snapshot view, major milestones achieved in the fiscal consolidation and management of the government finance along with the bird eye view here. So that's it. I'll be doing a separate video on the major announcements made in the budget of 22-23 very soon. So with that, we end today's video. Please like, share and subscribe to this channel for more videos, and be a part of my Telegram group and Telegram channel to discuss your doubts. I'll be providing the links of the same in the description box. That's all for today. Thank you.